Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, October 16th, and we'll see how things look for Friday, October 17th. Recapping Thursday's performance, the S&P 500 started the day on a positive note, opening higher, but quickly encountering resistance at the 6,700 level. The index then fell below the daily pivot at 66.69 and S1 at 66.14, before finding support at 6,600 and closing above S1, down 0.63% on above average volume. The short-term trend remains negative, while the intermediate-term trend is holding above the 50-period moving average, and the long-term trend remains positive. Small and mid-cap stocks struggled significantly. The S&P 600 small-cap index dropped 1.26%, and the Russell 2000 small-cap index fell over 2%. The financial sector, particularly regional banks, was a notable underperformer, declining 2.78% and raising concerns about broader implications for the market, given the Russell 2000's 10% weighting in regional banks. The VIX continues to climb and is at 25.31, signaling increased investor anxiety. However, relative strength suggests the VIX may have climbed too quickly, potentially hinting at a short-term pullback. Switching over to the economic and geopolitical context. On the economic front, interest rates on the 10-year yield dipped below 4%, reflecting a flight to safety from stocks to bonds, a move viewed negatively in this context. Thursday's economic data painted a mixed picture. The Philadelphia Fed Manufacturing Index came in at a disappointing minus 12.8, well below the expected of plus 9.1, and the NAHB Housing Market Index surprised positively at 37 against expectations of 33. The Treasury reported a $198 billion surplus for the month, with the 2025 fiscal deficit lower than 2024's at $1.775 trillion. Geopolitically, a reported productive call between Presidents Trump and Putin, with plans to meet in Hungary to discuss the Ukrainian war, offered a glimmer of diplomatic progress. However, ongoing U.S.-China trade tensions and conflicts including Israel and Hamas and issues with Venezuela continue to add uncertainty. Market sentiment has turned extremely negative, falling below 25. Which could act as a contrarian bullish signal, though prolonged pessimism always remains a risk, similar to last spring. Looking at the technical and sectors, from a technical perspective, short-term momentum and trend indicators are negative, with the red line above the green line on the ADX. However, intermediate and long-term trends remain positive, supported by the 50-period and 200-period moving averages. The S&P remains overvalued, with the U.S. PE ratio currently at 21.4 and the median PE of 26.2 compared to a 61.5-year median of 17.9. The smart money indicators, such as accumulation distribution, Chaikin money flow, and oscillator, are negative in the short term, while longer-term indicators such as the vortex remain positive. Additionally, the bullish percent index continues to decline for the S&P. It is also good to keep an eye on two potential signals: a Hindenburg omen awaiting confirmation by November 7th, which could warn of a market correction, and a Zwag NYSE breadth thrust potentially being confirmed by October 24th, which could be bullish. Sector performance showed weakness in the financials, particularly regional banks, while tech held up better. Nvidia gained over 1%, though heavyweights including Microsoft, Apple, Amazon, and Tesla saw declines. Semiconductors outperformed on a ratio basis, and healthcare is showing signs of defensive positioning, attracting some capital amid volatility. Looking ahead to Friday, October 17th, the S&P 500 remains range-bound between the 20-period moving average as resistance and the 50-period moving average as support. The short-term outlook is negative, but intermediate and long-term trends remain positive. Key economic data expected includes housing starts, building permits, import-export prices, industrial production, and capacity utilization, though the ongoing government shutdown may delay some of these releases. Friday will be options expiration, which for the week has historically been positive 73% of the time going back to 1980. However, October 17th specifically shows mixed performance, neutral to negative for the Dow and neutral to positive for the Nasdaq and S&P. Seasonal trends in late October suggest potential weakness in late October, but a positive finish to 2025. Ongoing geopolitical issues and the government shutdown add layers of uncertainty. In conclusion, Thursday's market action showed short-term weakness, particularly in the financials and regional banks, with heightened fear reflected in the VIX. While intermediate and long-term trends remain positive, negative momentum and sentiment indicators suggest caution. It's best to monitor developments in the regional banks, upcoming data that ends up being released, and potential technical signals, including the Hindenburg Omen or ZWAG NYC breadth thrust. Thank you very much, and I will talk to you in the next podcast.